What's up, investors? It's the Russian dude. We do have some concerning reports by some analysts who see that the bond markets predict the possibility for an emergency rate cuts and an emergency FOMC meeting, because you already saw how Friday and Monday closed on the stock markets deep into the red. We are in the correction zone, at least for the Nasdaq, and there is no still clear end in sight. The situation might get worse. Once again, for this reason, we might see potentially an emergency rate cut and FOMC meeting within a week. So let's talk about all of this right now. First of all, since we did mention the FOMC meeting, right here I just found a very interesting data representation, how many different words Jerome Powell said during the most recent FOMC meeting, which allows us to see the most concerning, the pain points of the Federal Reserve. And these words are obviously the inflation, meeting, market, labor data, rates, and policies. And even though it was expected that there will be no rate cuts in July, so the market did not react to anything, pretty much it was neutral reaction. However, there was then jobs market data, specifically unemployment, which rose up to 4.3% from 4.1% previously, and then US non-farm payrolls, which only added 114,000 when the expectation was a whopping 176,000. And this was the major trigger for the events of the last several days, we guys clearly saw. This data alone allowed the market participants to assume that we might be heading towards the recession, which put the probability of September rate cuts close to pretty much 100%. But whenever there was no rate cuts in July, whenever we received this concerning data on the labor market, a lot of market participants and Wall Street experts, they started seeing the probability that there might be a necessity for a preliminary, premature rate cuts, because the stock market right now, and I mean just the economy in general, it does feel a little bit shaky and unstable. For example, one of the first guys, Peter Schiff, he did mention that even Powell himself, he does not seem way too confident that the inflation is gonna hit their own target of 2% anywhere in the near future. That is why maybe one of the first things for Jerome Powell to do during the September FOMC meeting is to do the rate cut, just kind of to show the market that, guys, relax, take a chill pill, we got it. We got it all covered, the inflation is going towards 2%, we are confidently now starting to cut the rates. And then a very typical Wall Street thing began, which basically means that all these extremely important big financial organizations, Citibank, JP Morgan, Wells Fargo, Bank of America, you know them all, they started making and then revising even their own predictions how many rate cuts will happen in 2024, and then what will be the total rate cut combined by the end of this year. We start with JP Morgan and Citibank, which saw only 2 cuts of 0.5% each. And these cuts are to happen in September and in November. Then we had Goldman Sachs, which said that instead of 0.5% decrease in September, there will be a 0.75% cut. And guess what? The Citibank was like, no, we want to be presenting the biggest number. We want to have the biggest number, the biggest headline. They said, no, now we revise our expectation from 1%. Now we think that the interest rates will decrease by 1.25%. Yes, we have the bigger number. just honestly feels like just a bunch of kids who are saying, no, I am bigger. No, I'm taller. No, my father is cooler. Like it just honestly feels like this. But jokes aside, we do see that right now a lot of financial organizations, they increase the total rate cut by the end of 2024, because originally majority of people, majority investors thought maybe it will be just like one cut and the total cut will equal approximately 0.5%. Well, now we go as far as 1.25% already. And once again, the reason for this is the probability of the recession is that the Federal Reserve, according to them, they need to restart the economy, give it a life push as fast as possible. And then, according to some other stock market experts, specifically the ones which do follow bond markets more closely, they do see that the bond markets, they predict the possibility of approximately 60% that there will be an emergency FOMC meeting and a rate cut within a week. And in case it does happen, this is the very first emergency FOMC meeting and emergency rate cut all the way since 2020. So as you can see, in order for this to happen, something extraordinary needs to happen. In 2020, I mean, it makes sense what did happen, but now, right now, we see that Friday and Monday there was a huge decline on the stock market. Nasdaq corrected itself up to 10% and below, literally in less than a week or two. So, I mean, yes, this could be the reason for an emergency FOMC meeting. Even the head of Chicago Federal Reserve, Austin Goolsbee, whenever he was asked, do you guys plan an emergency meeting to start cutting the rate before September? Well, as every politician should answer, he said, we cannot answer this right now, we need more data to make any further decisions. So he neither confirmed nor declined, but judging by the way he replied, they are at least considering this option. So it might be a reality. But still, we obviously do remember what happened on the stock market on Friday and then on Monday. But on Tuesday, the stock market did rebound at least a little bit, as you can see from this picture. So majority of these big tech companies are in the green zone, which once again calmed down the market participants at least a little bit. But it was only Tuesday. We still have half week to go. The situation might go south very fast and very unexpected, so let's just keep watching. And as always, thank you so much for your attention. Please like this video, subscribe to my channel if this was interesting, informative for both, and see you tomorrow.